When Roberto Calvi's body was found hanging beneath London's Blackfriars Bridge in June 1982, his pockets were stuffed with bricks and $15,000 in cash. The Italian banker, known as God's banker for his ties to the Vatican, had vanished from Rome days earlier. His death would expose a financial web stretching from the Pope's private bank to money laundering operations across 3 continents. The bricks weren't random. In Masonic ritual, Blackfriars symbolize betrayal. Someone wanted to send a message. This is another story where money, power, and history collide. Nothing is ever as simple as it looks. Most people see the Vatican as a spiritual institution. 2,000 years of faith, tradition, and moral guidance housed within 121 acres in Rome. The Pope speaks to billions. Cardinals pray for humanity's salvation. Pilgrims journey thousands of miles seeking divine intervention. But the Vatican is also a sovereign state. It prints its own euros, issues its own passports, and operates its own bank. The Institute for the Works of Religion, known as the Vatican Bank, manages assets worth billions. It answers to no financial regulator except the Pope himself. For centuries, this dual nature created the perfect storm. Spiritual authority combined with financial opacity. Divine mission mixed with earthly greed. The result was a shadow banking system that would make modern cryptocurrency schemes look transparent. The Vatican's financial empire began with a simple problem. In 1870, the newly unified Italy seized the Papal States, stripping the Church of its territorial income. Pope Pius IX declared himself a prisoner of the Vatican and refused Italian compensation. The Church needed money to survive. Enter the black nobility, Catholic aristocrats who donated their fortunes to the Holy See. By the early 1900s, these contributions formed a substantial treasury. But the Vatican needed more than donations. It needed investments, growth, and protection from political seizure. In 1942, Pope Pius XII established the Vatican Bank with a mandate unlike any other financial institution. Its purpose was to provide for the works of religion, a phrase so vague it could justify almost anything. The bank operated under canon law, not Italian or international banking regulations. Its books were secret. Its depositors were anonymous. Its transactions crossed borders without oversight. The system worked like a financial confession booth. Money went in with no questions asked. It emerged clean, blessed by proximity to the sacred. By the 1960s, the Vatican Bank had become a washing machine for questionable funds. Italian politicians hiding bribes, mobsters laundering drug money, and multinational corporations evading taxes all found sanctuary within those holy walls. The bank issued numbered accounts with no names attached. It transferred funds through a network of shell companies registered in tax havens. Michele Sindona, a Sicilian banker with mafia connections, became the Vatican's financial advisor in the 1960s. He taught church officials the art of offshore banking, showing them how to move money through Swiss accounts and shell companies in Liechtenstein. Sindona's motto was simple: money has no odor, especially when it multiplies. The Vatican's relationship with Sindona introduced them to Roberto Calvi, president of Banco Ambrosiano, Italy's largest private bank. Calvi became the ultimate middleman, channeling funds between the Vatican, Italian politicians, and South American dictatorships. He created a labyrinth of holding companies across Panama, Nicaragua, and Peru. The genius of Calvi's system lay in its circular structure. The Vatican Bank would lend money to Panamanian shell companies controlled by Calvi. These companies would then deposit the funds back into Banco Ambrosiano, creating phantom assets on both sets of books. The money existed everywhere and nowhere simultaneously. By 1980, this financial shell game involved $1.4 billion in phantom loans. The Vatican appeared wealthy on paper, while Calvi's bank remained technically solvent. Both institutions could borrow against assets that existed only in accounting ledgers. The scheme funded more than luxury. During the Cold War, the Vatican Bank became a conduit for CIA operations in Latin America. Money flowed from Washington through Vatican accounts to fund anti-communist movements in Nicaragua and El Salvador. Pope John Paul II, himself a Cold War veteran from Poland, blessed these transactions as necessary evils in the fight against atheistic communism. The system's beauty was its moral cover. Who would investigate a bank operated by saints? Who would question transactions blessed by the Pope? The Vatican's spiritual authority created a financial sanctuary that no government dared to penetrate. But every pyramid scheme eventually collapses under its own weight. In 1981, Michel Sindona was found guilty of bank fraud in New York and sentenced to 25 years in prison. Before his sentencing, he promised to reveal explosive secrets about Vatican finances. He died in his Italian prison cell after drinking cyanide-laced coffee. Italian authorities ruled it suicide. Roberto Calvi's fate was sealed when Banco Ambrosiano's phantom assets began to unravel. Italian bank inspectors discovered that $1.4 billion in loans to Panamanian companies had no collateral. The shell companies existed only on paper, controlled by Calvi himself through Vatican Bank intermediaries. As prosecutors closed in, Calvi fled Rome using a false passport. He reached London seeking help from his Vatican contacts. Instead, he found himself dangling from Blackfriars Bridge with Masonic symbols arranged around his body. Italian courts later convicted 5 men of murder, including a mafia financier and a former member of the secretive P2 Masonic Lodge. The Vatican initially denied any knowledge of the Panamanian companies. Church officials claimed they were deceived by Calvi's fraudulent schemes. But documents seized from Banco Ambrosiano revealed that Vatican Bank officials had signed letters of comfort guaranteeing the phantom loans. The church had provided official backing for $1.4 billion in non-existent assets. Faced with irrefutable evidence, the Vatican agreed to pay $244 million to Banco Ambrosiano's creditors as a recognition of moral involvement, without admitting legal guilt. It was the largest financial settlement in church history, paid from donations intended for charitable works. The names have changed. The behavior hasn't. Modern central banks operate with the same opacity that once shielded Vatican finances. The Federal Reserve creates trillions in digital currency with no congressional oversight. The European Central Bank purchases government bonds using money conjured from accounting entries. These institutions answer to no democratic authority, yet control the global money supply. Cryptocurrency exchanges now promise the same anonymity once offered by Vatican-numbered accounts. Digital wallets replace Swiss bank accounts. Blockchain transactions cross borders without government surveillance. The technology has evolved, but the appeal remains identical: financial secrecy blessed by technological mystique. Today's tax havens operate like modern Vatican banks. Delaware shell companies, Irish tax inversions, and Cayman Island funds all provide the same service once offered by those sacred walls: a place where money can hide from questions about its origin or destination. The Federal Reserve's balance sheet has grown from $800 billion in 2008 to over $8 trillion today. Most of this expansion happened through quantitative easing, a euphemism for creating money from nothing to purchase government and corporate bonds. The mechanism differs from Calvi's phantom loans only in scale and legal blessing. Even the moral justifications echo through time. The Vatican claimed its financial secrecy served God's work. Modern central banks claim their monetary creation serves economic stability. Both institutions wrap their power in noble purposes while operating beyond democratic accountability. The Church didn't invent financial corruption. It simply sanctified it with moral purpose and institutional mystique. Every powerful institution learns the same lesson: the best way to hide questionable behavior is to wrap it in unquestionable authority. Money flows toward secrecy like water toward low ground. The Vatican Bank succeeded not because it was evil, but because it offered what every financial system promises: the transformation of questionable wealth into respectable assets. The blessing of religious authority simply made the transformation more convincing. Today's financial system has replaced religious mystique with technical complexity, but the underlying promise remains unchanged. Central banks, offshore havens, and digital currencies all offer the same service once provided by those Vatican walls: a place where money can exist without uncomfortable questions about its origin or purpose. The people who control the world's money don't need to break the rules. They just need to write them.